In this video, we're going to talk about big returns trading options with a small account in 25. The first thing I want to do is break down my last option trade for 2024. 6.51% total ROI profit in one day, less than 24 hours. We'll go through the trade right now. So one day, 6.51% ROI. And I got to tell you, patience is underrated for sure, because that's what it took. The limit order to buy happened on Thursday, December 26th. You can see here Eastern time, 11:36 a.m. And the cost was $9.11 per contract, and it was a put, long a put, and the maturity on this put is March 31st, 2025. And the sell, the exit, less than 24 hours, right at the open, 9:30 a.m. Eastern Standard, New York Open, the limit order to sell, exit the contract. These were 585 puts, and the execution was 1,034. So that is a 6.51% net ROI on a small account one day. So definitely redeemed from a big drawdown in November, and that puts me at a 22.55% 3-month ROI return. Definitely happy. This is my first venture into options. I've always been in futures, stocks, or ETF or mutual funds for years and years. And I've only recently in my career started doing options. So this is going to be, again, an outline of how to trade options for big returns with a small account in 2025. And this is the outcome of one trade. So let's go into the narrative for early January, because the conditions that made me want to make this trade are still existing in the market. And I want to go through the charts and explain how it works and what I'm thinking. The first thing when you trade options is you don't get your narrative from the actual options contract. You do everything on the futures contracts. And if I'm trading a spider S&P ETF, I'm not going to look at spider charts. I'm going to look at the S&P 500 micro futures. Okay. So nobody talks about that. And that's how I'm being successful, is you don't look at the underlying instrument of the actual option, but the core instrument of what the ETF is based on. And that's what we've got here. Weekly charts of how we closed. On the left, the S&P 500, on the right, the NASDAQ 100. So what this is telling me is we're still at a premium based on a weekly chart because of this middle Bollinger Band at 5904. This week didn't close anywhere near that real middle. We closed basically at a 6027, just under the 3 EMA blue line, 6044. So really not a sell-off that violated anything on a weekly basis. And keep in mind, we do have a really big event on Monday about that T+1 year end, and that is an important thing. So basically, here's the week charts. And I always, on the weekend before the new week, want to look at, well, where are we going to start the new week? And you won't know until Monday Globex opens, and then you go from there. But the bottom line here is this is not bearish yet on the weekly. Next chart. The daily chart, Bitcoin on the left, in the middle, the S&P micro, which is what I trade both on futures and the spider options. And on the right, we've got the NASDAQ 100. So daily chart, who's the weak sister? That would be the one on the left. And the reason is because the distance of the blue line, the 3 EMA, is below the red line, which is the 9 EMA, and price, you could see, really dropped. And look at the day before. This is the day after Christmas. We went with a premium candle wick above Christmas Eve, and then we lost all of that. So I would say that is the sixth sister of the three. Now the S&Ps, I'm just looking again, bearish close. We engulfed and went below the low of this Christmas Eve. So the Santa Claus rally really didn't happen for the week as far as the last 3 days went. And then the NASDAQ 100 really took a dip as far as complete range distance from the 24th, but it recovered some, but still closed below that 24th of December Christmas Eve candle. Both equity indices closed below the 24th of December candle. So that's what I'm really going to focus on here is what do we do on year end Monday? What do we do on that day? What is price going to do on London and New York Open, the silver bullet? I have dry powder. I'm not going to be trying to do anything in Globex. I'm just going to really watch what we can do. I am not leaning bullish, and the next chart will show you why. These are probably the three most important charts on a longer term basis, meaning several days, maybe even a few weeks. US dollar on the left, VIX volatility in the middle, and what I'm really watching with Hawkeye is the micro 10-year treasury yields. So the big green bar here is, of course, the Fed. What did the Fed do on the 18th? This is right here. They lowered rates. But what is the market doing? They say the first time in history after Fed is easing, the market's saying that's BS. We're going to raise, yields are going up. The Fed is going the other way. And we're since the 17th, the day before the FOMC actual rate cut, we're 5.2% up on the 10-year treasury yield. So I don't think this is getting enough press, but with the budget deficit at the government level, the high dollar, these things are competing basically against the equity indices. And then the only thing that's going to be the triple whammy is if the VIX gets really elevated above, let's say, an 18 or 19 and we start trending up. Now, today we did go up and we retraced a bit here on Friday, but we closed about a 15.95, and that is up from the prior day. So again, the focal point is the point I'm making here is the Fed is losing the battle. They probably most likely made a mistake because the market's totally disagreeing. It's a historic thing that the Fed's reduced rates the last two meetings, and since the last meeting, 5.2% up. I can't emphasize this narrative enough, and it's the reason why I'm not bullish, even when this seasonality ends for January after the new year. I'm not going to be leaning bullish at all, even though maybe it will still be a bullish environment as long as we stay up on the dollar and the treasury yields on the 10-year. I'm going to fade every time we have a spike, and at very opportune times, I'll be buying put options. So that's the narrative and the backdrop. Now, if this changes, I'll know, but do you see any declines here on this daily on the treasury yield for 10-year? I don't. So this trend is intact, and the dollar is very stable too. We're just basically bull flagging. So this is the most important three charts I can think of. Next chart. So the 4 hour has been a lot of help for me because sometimes the weekly and the daily just don't give me enough intraday bias on my future trades or even my option trades. Here's the 4 hour S&P micro futures on the left, and I've got the volatility index. You can see the VIX volatility is diddle in the middle. So that's not really giving me a bias, long or short, because we're in the middle. However, on the 4 hour, you see the middle Bollinger Band. We're definitely at a discount with price closing at 6029 here. and basically the middle at 6053.50. The dash line on the top is relative equal highs, buy side liquidity 6100, and I've got a low here. The first one is just above 5960, basically this candle right here. And if I want to go into a little bit more deeper, we could say that we're in, as I know this is a real busy chart, but we've got this daily fair value gap and we didn't violate it with the candle body. So because we stayed within this big rectangle here, which is a daily fair value gap imbalance, I'm not real bearish. I'm not real bullish. I'm just going to be patient, sit on hands. I do not have to take a trade in futures or options Monday or Tuesday. The plan, keep dry powder unless on a higher time frame we were to do something. And I'm not, because we already looked at the 10-year treasury yields, the VIX, and the dollar. I'm not looking to buy here. But if we were to go above this middle Bollinger Band in any way, shape, or form, I do see a little new 4-hour fair value gap between this candle low right here, and that's about a 6069.75, by this candle top here on the wick is 60475. So if we got in the middle of that, 605 and change, maybe a 606, I might take a runner short just to fade as a beginning position, not on options, on futures. And again, it would just dip my toe in the water. It would not be anything near a full position. It would be strictly a runner. Where I really am interested in fading is up here with the upper Bollinger Band at 6118 to 20 zip code, or the neighborhood of the equal highs at 6100. That'd be where I would start to add some size. So basically that gives the narrative on the higher time frame. Let's look at a Renko range chart in a 15-minute and we'll wrap this video up. A golden key that I use is the chart on the left, a range chart, because I love to see Keltner channels with specific settings over a Renko chart. And so what I've got here on the left is this Renko chart, and you can see here where this cursor is. This was where I initiated buying the put on Thursday. And then you saw I got a great decline, and that was how I got the 6.5%. So the final nail in the coffin for taking the trade was the duration of how long price had sustained above this red line, which is the middle Keltner band on a Renko chart. And we just kept there in suspended animation. And I really liked my odds because we did not hit this upper blue. So we hit it once, we come down, we don't hit it again, relative equal highs, which again leads me to be reasoning we could still go back up before the new year and hit that area. And that would be attractive to me to fade if we got up here. So most valuable player, MVP award chart goes to the most help on option trades, to this one. And then when I want to look on another layer, then I'll add my premium and discount arrays on top of it. And this just gives me, I know with the busyness of this, it's crazy, but it works for me. And that's what you got to do with chart. Chart art has got to work for you, but naked charts really are refreshing for the eye. The right chart is on the 15-minute here. And again, what I'm looking here is the time, Friday. Look at this silver bullet start. This was the big acceleration down. And we got back into, at the end of the day, this candle. But how much of the candle did we really get back? Only pretty much maybe the middle of this black candle. So a good displacement. So a big test is going to be is if Friday bulls at any way, shape, or form can reclaim the full range of this down candle, which was the silver bullet start for Friday. This is what I look at for getting high probability trades, both on futures and options, but I'm a lot more picky with the options. I've got to be, and I've learned a lot on how to place my stops after taking a hit in November, but ended up with a good 3-month return. I hope this video helps. I want to shout out to all this existing subscribers. Thank you so much for your support. And I also want to welcome anybody new to the videos and to continue to enjoy watching them, because I'm going to look forward to sharing my journey both on futures and options trades and my strategy, and also my coaching. What I'm going to be doing is one-on-one coaching, opening that up to a limited amount of people that really want to take their trade to a next level with a one-on-one accountability coach that can help them with their trading process. So thanks again. We'll see you in the last day of the year, last couple of days. Aloha. Bye-bye.